Good Monday. This is Kyle Custer here at Seafried and Brew, and pleasure to join you all. I'm by myself this week, but we're just going to do a quick economic discussion about the coincidence indexes and leading indexes. Jay's talked about them numerous times. We've been waiting for a while, and we've finally gotten a few of them. So they've been revised, and they usually take a little bit to come out. So January had just come out last week. So here's a 3-month change in coincidence index. Again, not much going on here. It's very slow growth. We're looking at the annual rates too. We're actually below kind of the boost we got in 2014, if you can call it that. And right now in January, it's at a 0.78. So let's see if anything really changed. We just got February's coincidence index. They come out in a really quick batch right now. And February's coincidence index is 0.78 again. So again, really no changes. Very slow, moderate growth, which I think we're all kind of seeing. Janet Yellen kind of mentioning and very subtly saying that the economy really isn't as strong as we think it is. We're just not getting that concrete, fantastic number that I think the Fed's waiting for. And these charts are really showing that. It's just kind of a trudging along and moving slowly. Now, a couple points to note here with the newest release as of yesterday. The 3-month coincidence index is showing, North Dakota. You're going to get that slow growth. It's in the pretty dark red. It's not, or it is the lowest one that there is. It's below a 1% growth rate, negative 1% growth rate. And that's obviously a result of the shale industry kind of getting hit there. So we move to the leading index, which take this with a grain of salt because there's a new one coming out tomorrow. The February leading index will be out tomorrow. Log on to the Philly Fed site, check it out. For now, here's the January leading index, actually showing what looks like pretty moderate growth. All the greens, some dark blues, those are very positive indicators. We're seeing North Dakota the next 6 months still lagging a bit. Louisiana, although not as heavily focused, they have a little bit more diversity in their GDP. They still are tied to that oil and gas industry, and you're going to see a little bit of slowdown there as well. Alaska, that's another one that's very closely tied to the oil and gas industry. And as opposed to Louisiana, who's got around 10% of their GDP is tied to that industry, Alaska is actually around 70%. So it's significantly heavier effect towards a state like Alaska with these oil prices being down, depressed so low. So we'll probably see this Alaska being in that pink red area for quite a while. Jamie actually came up with this chart yesterday. Very interesting. No alarms ringing here, but what you can see is when looking at the leading index and how many states are in those green areas or the blue areas, if we're at all 50, we're in a growth area, obviously. However, you can start to pick up a trend here during periods of recession. And during our last recession, we actually got to a point where there were a few months of 0 states with growth in them at all. So when we say this is a great index to look at, it kind of gives you a little bit of a heads up if we're starting to get into some mucky waters in terms of the economy. It does. It gives you a little bit of a heads up before the whole entire country enters into recession. So that's all I have for you this week. Jay will be back next week, and I'm sure we'll be talking more about these indexes as they continually to be batch released. They were kind of held up during the revisions. Although we did not see very heavy revisions, nothing to really take note of as of right now. But again, Philly Fed tomorrow releases the new leading index. Check it out. And we'll be back next week. Thank you.